continuing our zest for highest level of development for nation in our national development series. This is Policy Times Unleashing India, giving one more video on Secured Insurance Fund. Now, this Secured Insurance Fund has been thought of to take care of all the funds which are required for India's development through a very fascinating methodology in which the funds will be coming into the system. And from the system, this is not any external borrowing. This is not any way in which we have to dig for gold and dig for black money and dig for something else and all. This is something by which those things can go on in their own way, but this is something which will be in the system. Let us understand India from its present financial positioning. India every year has almost about 34-35 lakh crores counted. And it has got a built-in debt of 121 lakh crores going up to 135 lakh crores in the current year. And all the states put together have got an additional debt, state put together almost 5,300 lakh crores. This debt is generally never discussed because this is something which is between India and its people. And a small amount is from other World Bank and so on and so forth. Now, with this type of a debt coming in picture, there is always a question mark on how India can develop and what is it that we are living in for future. So in that connection, we have come out with this new idea called Secured Insurance Fund. What is it that we are meaning by this? We made a detailed analysis of the way the funds in the country are moving. And we found that a fraction, a smallest fraction of this fund is taken to ensure the funds being transferred, which again means any fund which is going from anyone to anyone, of course, above a value of 10,000 or maybe even a lakh of rupees, 0.01%. And this could even be 0.001%. That means if smallest fraction of money, 1 rupee in 10,000 or 1 rupee even a lakh of rupees of transfer is taken for this insurance. Why these two different figures? In one figure, we almost, if we get 0.001%, it comes to about 500 lakh crores per annum as the money coming in picture. If 0.01%, that means 1 rupee in 10,000 rupees is taken as an insurance fund, it comes to 5,000 lakh crores. Okay. So this fund is something which has not been touched at all till now. Till now, every transaction goes. Whereas there are other taxes which are there are transfer taxes, there are transaction taxes, there are CST, GST, so many things which are there. But this is something which will make a huge difference to the working of the country. Now, why this is called Secured Insurance Fund? Okay, we do not want to come as one more tax because tax has its own this thing. There are enough agencies inside having their own agenda. Why the tax is there, why the tax should not be there. And we don't want to call it insurance alone because, you know, it has got its own norms. So we are calling insurance fund. That means by this fund, government is ensuring that it gives a stamp that any money has gone from right hand to left hand. Between two transactions are being, you know, confirmed by government. By this, many times there's uncertainty of a bank falling off or a cyber security coming in picture or some other collapse of something or somebody who has given and then has the company has got wound up. All those things can be first taken care of by this fund. Balance, since the fund coming is very, very large, the balance fund can go for all development, including state bank, state governments to come out of its pending debts. That means state government will not keep on building up the debts. Government of India will not build up its debts, and there will be very good defense budget, starting from healthcare, starting from all COVID-related cases, starting from all bank failures and any of the others created by banking structure is the backbone of the country's growth. Banking structure has to be kept very, very strong. This will ensure banking structure. And this comes within the norms. We are not going for any external borrowing. We are not going for any debt which are not so good. And this is something which is there, the fund being transferred from X to another, and which, as we can see, is so good and so large that this fund 0.01% to 0.001% is something good enough. Fortunately, I did have a very big web summit calling many people from the banking industry, including the ex-president of Indian Banks Association and many other chairmen of banks, chairmen of personal, large institutions, including government officers, and got an extremely good feedback that this is something which is fully doable, and this is something which is within today's norms of rules of the government, rules of the finance and banking sector. So this is what is recommended, that we transact anywhere between 0.01 to 0.001 on any transaction, which is easily possible by today's computerized banking system. And if something is done off the banking sector, it should be almost 5 times. That means 0.01 become 0.005, 0.001 will become 0.005. So that, we defer people. That means anybody who is having a cash transaction outside the bank and then finally want to say, yes, this money belongs to them, there will be this much deduction in the transaction, so that we give full emphasis on electronic transfer of funds. And this gives a very good leverage for the national growth. Thank you.